Hello and welcome to another presentation. In this presentation I'm going to discuss mortgage fraud, but the questions and points raised here would also apply to credit card fraud. This doesn't matter if you're in the United States, Canada, or UK, or anywhere else. The fraud is the same virtually everywhere. So what I suggest people do is take notes what's presented in this presentation, and then do your own due diligence. See if the information presented here resonates with you, and if you are questioning the validity of your mortgage, the points raised here may lead you down a certain path. I'm going to present the point, and then I'm going to explain what the correct answer is and why it is that answer. There's approximately 32 points, I believe, in this presentation. Without further ado, let's get moving. Questions to ask the bank. Now this is assuming that you already have a contract with the bank or the credit card company. So it says when we, and we could be you and your partner, or we could just mean you. So when we agree to a loan and it's accepted by Prompt Financial Solutions, which is the name of the financial institution in this example, has that created a trust? And the answer to that question is absolutely. A trust was created between you and them. So question 2, if a trust has been created by my autograph, or signature as you may want to call it, agreement, what are the roles or the fiduciary duties of Prompt Financial Solutions and myself within this trust? Number 3, in a transaction, is it not clear that Prompt Financial Solutions is acting in capacity as a trustee? And the answer to that, of course, is yes. Does Prompt Financial Solutions hold any legal title? And the answer is no. Now, the reason Prompt Financial Solutions in this example is acting as trustee is because when the contract is put before you, before you sign that contract, it's simply an offer. And then when you sign that contract, you've accepted the terms and conditions of that offer, but the terms and conditions of that offer must be outlined clearly. No company, whether it's a bank or a credit card or anybody else, is allowed to change the terms and conditions of that contract without your knowledge and or consent and or agreement. So therefore, when you sign the contract, yes, there is a trust agreement, and if you reviewed my previous presentation on trusts, you will know that there's 3 parties to a trust: the grantor, settlor, the beneficiary, and the trustee. Now, you granted them permission, but you've also applied for it, so they've granted you permission. But then when you've accepted it by your signature, that creates a trust indenture, which is in fact private between you and the bank, or you and the credit card company. Okay? And when you do this, they advance you funds, so you would think that you would become the beneficiary. But in actual fact, your signature created the value to the trust. And therefore, if you are the person that's putting value to it, that shifts the role now to the point where you're the grantor or you're the creditor, and the bank is the beneficiary, or the credit card company. So my next question to them would be, who holds equitable title? Well, given the fact that your signature created the value to the contract, and there's no disputing that fact, that would put you in the equitable title position. Is an agreement signed by you, for example, a financial instrument? And the answer, of course, is yes, because they take that financial instrument, i.e. the contract, and that creates the value to the whole operation. So number 7, is it not true that an agreement must be signed by both or all parties before it is legally binding? Under contract law, that is true. Now, one thing that you may or may not be aware of, sometimes they will put an X and they will tell you to sign next to the X. That could signify their signature. Remember, in the old days, people used to just make their mark because they didn't know how to print. That could be a scribble, could be a thumb mark, could be an X, could be whatever. Question number 8, can a financial instrument be securitized? And the answer to that, of course, is yes. And this gets into fractional reserve banking and other things that happen behind the scenes, which we are not at liberty to know from their perspective, and is beyond the scope of this presentation. Number 9, what lawful consideration does, in this case, Prompt Financial Solutions give when agreeing to the loan? And if it's a private bank or a private loan, they may in fact advance their own funds. But if it is a publicly traded bank, such as HSBC or Toronto Dominion, CIBC, Barclays, they likely did not advance any of their own funds when agreeing to the loan. Number 10, what creates the source of the funds that Prompt Financial Solutions claims it lends? And it should be evident by now that your signature created that value, therefore making you the creditor. Number 11, when Prompt Financial Solutions accepts a loan contract, does Prompt Financial Solutions disclose what it does with the social insurance number and or birth certificate which it demands from the applicant? And the answer to that question is of course not. And because they don't disclose it, that would be a potential argument you can use in challenging the validity of the loan or credit application. Number 12, what does Prompt Financial Solutions do with the social insurance number, birth certificate number, which it demands from the applicant? So in the question above, I said, did you disclose it? And in number 12, I point blank ask them, what do you do with it? Okay? Question number 13. When Prompt Financial Solutions accepts a loan contract, does Prompt Financial Solutions monetize the instrument, creating a credit on account, which it then uses to fund the loan to the applicant? And the answer to that is yes. Unless Prompt Financial Solutions is a private individual, a private company or individual, it does in fact create or monetize the instrument, which is the contract, creating the credit on the account. So if that's the case, that confirms that you are the creditor, because without your signature, nothing can move forward. Question number 14. If Prompt Financial Solutions did not loan its own money to a customer, meaning you, but monetized the signed loan agreement creating new funds on the account, would this loan not be an exchange rather than a loan? Would this not be an exchange rather than a loan? Because they're not loaning you money, they're simply exchanging your signature for credit on an account. Does Prompt Financial Solutions accept promissory notes? And if so, how would I go about presenting one for acceptance? Well, the answer to that question is absolutely. Prompt Financial Solutions, or any other lender, private or public, does in fact accept your promissory note, okay? And therefore you can issue another promissory note, which is what happens when you refinance a loan. Okay? Question 16. Is it true that the lender, and I'm using that term in quotes, Prompt Financial Solutions, follow GAAP, generally accepted accounting principles? And you're asking them to respond yes or no in writing. Well, we know that every financial institution has to follow GAAP, regardless of whether they're in Canada, the United States, Australia, wherever they are in the world, they have to follow GAAP, which means they have to balance their books at the end of the day. There can't be any more money going out than there is coming in. This is why when they have you sign a loan application, that creates a liability issue on the part of the bank or credit union or credit company, okay, because they have a liability to you, and their books are off balance because there's a liability, and so they settle this off balance by crediting the account. So think of it as a teeter-totter. You sign the contract, they have an obligation to you, they fulfill their obligation, put equal weight on the opposite side of the scale, and everything is now balanced. Question 17. Was full disclosure given regarding if the borrower was to provide funding for the loan as per the bookkeeping entries under GAAP? And of course the answer to that is no. Does Prompt Financial Solutions accept something of value from the borrower that is recorded as an asset on the books of Prompt Financial Solutions, resulting in a new liability? From the explanation I gave you a couple seconds ago, of course the answer is yes. Number 19. Did Prompt Financial Solutions loan or lend the borrower, Prompt Financial Solutions, its own pre-existing money or assets? And if this is a public bank, the answer, of course, is that to that question is no. Banks in Canada, in fact, are prohibited from loaning any of their own money, and I suspect it would be similar in other parts of the world, although I haven't confirmed it. Number 20. Did the borrower have full disclosure of the bookkeeping entries? And of course the answer to that is no. Did Prompt Financial Solutions add interest to the borrower's own promissory note agreement contract? And of course the answer to that is yes. Every loan has interest. Now we have a bit of a problem here in that the only time that a lender is allowed to charge interest is if they are at risk. In other words, if they're at risk of losing money. Well, the problem with this becomes the fact that all financial institutions carry insurance, so they can claim it on their insurance if they lose money. Secondly, they usually securitize the house or piece of asset, whatever it is you're trying to buy, as collateral against the loan, so they can then take that asset and sell it should the need arise. So they're not at risk there either. And third, because your signature created the value to the contract via a promissory note, and they securitize that, they're never at risk, and therefore they can never charge interest. It becomes a usury fee, and it is illegal. So then on number 22, I specifically asked them, what equitable value or consideration did Prompt Financial Solutions give in return for the borrower's promissory note agreement or contract? And of course the answer to that is nothing. So this is a one-sided contract with no benefit to you. What the bank or financial institution in fact does is act as an intermediary, or what we call a transmitting utility, to simply exchange one thing for another. Your signature for credit which you created with your signature. Question 23. Is it the intent of the loan agreement in which the party who funded the loan, which is you, as per Prompt Financial Solutions bookkeeping entries, is to be repaid the money lent to the borrower? Yes or no in writing. Well, this becomes a double-edged sword because technically you are the lender, because the bank or the financial institution, credit card company, then uses your signature to create funds on the account, which it then loans to its other members under fractional reserve banking. Question 24. Does the lender record an asset showing the borrower owes money to the lender involved in the loan agreement? And of course the answer to that is yes. 25. Is it true that according to the bookkeeping entries the borrower funds the loan? I'm asking them point blank. Are you the funder of the loan? Yes or no in writing. And you notice I give them yes or no in writing because I don't want some explanation that I don't get the answer I want. So I'm leading them to answer my question the way I want them to, so that I can use those answers, or lack thereof, as evidence in a court trial should I decide to go that route. Number 26. Is it true, according to Prompt Financial Solutions bookkeeping entries, the borrower is the depositor, therefore the creditor of the principal amount? Yes or no in writing. Now, I will explain 26. So is it true, according to Prompt Financial Solutions bookkeeping entries, the borrower, which is you, is actually the depositor because you're giving your signature on the contract, therefore you're depositing it with them. Therefore, because of this, you are the creditor of the principal amount of the loan. And the answer is yes or no in writing. Of course, the answer is yes. But in actual fact, you're not only the depositor and therefore the creditor of the principal amount, you're also the creditor of the principal amount and the interest. Number 27. It is now clear that Prompt Financial Solutions had to have violated GAAP, General Accepted Accounting Principles, thus making the agreement contract null and void. Yes or no in writing. So whichever way they answer these questions, I can use it against them. And if they don't answer the questions, then I'm free to draw my own conclusions, provided they make sense. 28. Is it true that Prompt Financial Solutions converted the agreement contract or promissory note by using its value to give value to a bond, check, or other similar financial instrument, as proven by Prompt Financial Solutions bookkeeping entries, thus proving the borrower, which is you, funded the loan and provided Prompt Financial Solutions used concealment and false statements that Prompt Financial Solutions funded the loan? Yes or no in writing. I've asked them point blank. Is it not true that you've committed fraud or lack of disclosure with the contract? And of course, from this presentation, you can clearly see that not everything was disclosed. And if they use fraudulent concealment, as we've outlined in this question, there is no statute of limitations on fraud. Therefore, if you have a loan contract or a mortgage contract or a credit card contract, you now have the ace in the hole to get around the statute of limitations liability. The same thing goes through with your council tax issues or your property tax issues if you live in a jurisdiction that calls it property tax versus council tax. The same thing would apply with federal income tax. Fraudulent concealment. Number 29. Is it true that Prompt Financial Solutions is charging or curing interest on a loan agreement and has not applied any of the payments made to date towards the principal, as indicated in the latest correspondence from Victoria Smith? Now, this is an actual case that happened, and yes, it is true, based on the paperwork that I have, that none of the interest payments, the principal payments, or the interest were applied to the loan. Now, would the actions outlined in the point above be illegal, unlawful? And of course, the answer to that is yes. They've operated in dishonest and deceptive practices, therefore making the whole contract null and void. Question 31. Has the loan agreement mortgage contract been sold to a special purpose entity for securitization and pooled into tranches with other mortgages? If you're dealing with a public bank, the answer to that question will be yes. Question 32. Is it not correct that the mortgage renewal fee was not disclosed when the initial contract was established? And this is true for anybody that gets a mortgage that has to renew it at a higher interest rate. They did not tell you what the higher interest rate would be when you first signed up for that mortgage, and therefore you have a right to say no. Now, in the case of Prompt Financial, disclosure was requested some 3 months prior, which they did not provide, and is the result of me generating this presentation. Now, another question. Number 33. What guarantee does the applicant, meaning you, have to cap the renewal fee on a mortgage? And in actual fact, when they do a renewal, there is no cap on the fee, according to what the way they do it. They can change your rate from 4% to 11% overnight. And this is a big problem because many people can't afford this higher interest rate, which leads me to, there are other ways to deal with this. Now, to continue this presentation, I will just carry on with this, and we can get into more in-depth discussions on mortgages later should the need arise. So I conclude by writing, this notice in no way constitutes a dispute or controversy by the borrower. However, if it can't be shown or proven in substance beyond a reasonable doubt that Prompt Financial Solutions have not breached the agreement of the loan principal sum out of their own funds, not value/money created by the promissory note, or that full disclosure was not given, the following is demanded within 30 days. Any alleged outstanding amount is to be balanced and returned to zero, because any contract based on fraud is null and void. A statement showing the discharge of the alleged debt showing a zero balance. So you want it zeroed out, and you want a statement to that effect, basically. A written guarantee that no report or negative nature or bad credit shall be given to any of the credit reporting agencies. Failure to respond to the demand will be deemed a dishonor of this notice. And then I put notice to principal as notice to agent as notice to principal, so that if the party that I address this to changes their job position, then the new person that gets appointed in the old job position is still liable. That's what notice to principal. When I say notice to principal, I'm notifying the person that I've addressed this to that I'm holding them liable. And then I say is notice to agent, because if they apply somebody else in that position, they're also liable. And then notice to agent is the new agent is notice to principal. For those of you that have questions or have other concerns that have not been addressed in this presentation or my previous ones, I can be reached at the email address shown here. And my PayPal account is also the same as my email. If you wish to make a donation, I would appreciate it. As you can imagine, it takes a considerable amount of time to deal with each specific problem. And although I don't mind helping people, I do have other financial obligations as well. I'm sure the viewers will understand that. I would like to set up a presentation one-on-one with anyone that wants help, but more importantly, I want to set up presentations that are hosted within the United Kingdom. I am thinking about going on tour, and then you can ask Stan your question and bring your paperwork with you. If you have any specific topics that you would like covered at that presentation, I will be more than happy to address them, and you can let your request be known at the address above. I intend to make that presentation starting the end of this month. So the end of October, we should be getting this going. I plan on addressing council tax. I plan on addressing HMRC, general court procedures, and this credit card mortgage fraud, as well as PCN and parking tickets. So, with that information given, you could take the information presented here and you could actually do it in a DSAR. If you recall from one of my previous presentations, I said you could do a data subject access request or a freedom of information, depending on which way you want to work at it, to obtain the information related to the above mortgage or credit card contract, and the company on the other end would be obligated to answer your questions. It is more than likely that you will be stalled and they will not provide the information, which is exactly what we want them to do, because they won't admit the fraud, and then we can put an affidavit in and put in the paperwork, fill out the N1, and potentially turn this mess around. If you have any questions, like I say, please feel free to ask at the above email address. I will not spend a inordinate amount of time on any one specific case, but if you have a specific question and I can answer it quickly, I'm more than happy to do so. Thank you for taking the time to listen to this presentation. I hope you found it helpful, and I look forward to bringing you more content in the future. Thank you, and goodbye.